The digital euro is on its way. The European Central Bank, ECB, is diligently working on introducing the digital currency and has now entered the next phase of its project. Back in June, the EU Commission paved the way with its statement. To adapt to the increasing digitization of the economy, the ECB is exploring the possibility of introducing a digital euro as an electronic complement to cash, as stated in the statement at that time. Now, as we step into October, the ECB's digital central bank currency is coming closer to reality. CBDCs, or central bank digital currencies, are digital forms of a country's fiat currency that are issued and regulated by the country's central bank. These digital currencies are intended to serve as a legal tender and represent a secure form of digital money that can be used for various financial transactions, similar to physical cash or traditional forms of electronic money. CBDCs are a response to the growing popularity of cryptocurrencies and the increasing demand for digital payment solutions. They can exist in different forms, such as wholesale CBDCs, which are restricted for use among financial institutions, and retail CBDCs, which are accessible to the general public. They are designed to provide a secure and efficient medium of exchange, with potential benefits including reduced transaction costs, increased financial inclusion, and improved transparency in the financial system. Additionally, CBDCs can offer central banks more direct control over monetary policy and a better understanding of the flow of money within the economy. Several central banks worldwide have been exploring the concept of CBDCs, conducting research and pilot projects to evaluate their feasibility and potential implications. The development and implementation of CBDCs raise various complex issues, including privacy concerns, cybersecurity challenges, and the impact on the existing financial system. As technology continues to advance and the demand for digital payment solutions grows, the discussion around CBDCs and their potential role in the future of finance is expected to remain a significant topic in the realm of monetary policy and financial innovation. While central bank digital currencies, CBDCs, offer potential benefits such as increased financial inclusion and improved transparency, there are also several notable risks associated with their implementation. One primary concern is the potential for increased cyber threats and hacking risks, as the digitized nature of CBDCs could make them vulnerable to various cyber attacks, potentially leading to widespread financial instability. Additionally, the introduction of CBDCs might lead to a significant reshaping of the current financial ecosystem, potentially causing disruptions to the traditional banking system and affecting the intermediation role of commercial banks, which could have implications for the stability of the financial sector. Moreover, there are concerns regarding the potential invasion of privacy, as the use of CBDCs could allow central banks to monitor and track individuals' financial transactions, raising questions about data security and individual autonomy. Understanding and mitigating these risks will be crucial in the responsible implementation of CBDCs. The European Central Bank has entered the next phase of its digital euro project, preparing for the issuance of the currency in the coming years, although a final decision has not yet been made. Considering the ongoing developments and discussions around central bank digital currencies, CBDCs, the ECB's Governing Council has given the green light for a preparatory phase, which will initially last 2 years. The ECB announced on Wednesday in a statement. During this time, the ECB will finalize its framework and select providers for the development of a platform and the necessary infrastructure. We need to prepare our currency for the future, said ECB President Christine Lagarde. We envision a digital euro as a digital form of cash that can be used for all digital payments free of charge and meets the highest data protection standards. It would coexist with physical cash, which will always be available and leave no one behind. While central banks around the world are seeking a digital alternative to banknotes and coins, the ECB is far from alone in exploring virtual cash. Most other central banks worldwide are considering this idea, with more than half of the central banks surveyed by the Bank for International Settlements conducting concrete experiments or working on a pilot project. The ECB launched its project in 2021 and has since examined various design features. Although skepticism persists among citizens, there is little doubt that the currency guardians would push the project forward. Advantages include universal acceptance for payments within the 20-member currency union and the lower volatility that cryptocurrencies struggle with. The ECB stated that the start of the preparatory phase does not imply a decision on whether to issue a digital euro. Parallel to the ECB, the European Union is working on a framework that would provide the legal basis and regulate key elements of the virtual currency. The final decision on whether to introduce it is left to the central bank. Doubts about this project persist. At the end of last month, a group of EU legislators urged the ECB to postpone its decision on the next phase, as the value for the public is unclear and the implementation is uncertain. Fabio Panetta, the ECB executive board member responsible for the project, counted that the next steps were merely further preparations and not a final decision on the introduction. Preferences for cash vary within the Eurozone, with German consumers preferring to pay with notes and coins. Bundesbank President Joachim Nagel defended the project in an interview with Deutschlandfunk on Thursday, but cautioned that he expects the digital euro to be ready for use in about 5 years. Considering the ongoing developments and discussions around central bank digital currencies, CBDCs, it is crucial to acknowledge the potential risks and uncertainties associated with their implementation. While the concept of CBDCs holds promise in terms of enhancing financial accessibility and transparency, the accompanying dangers are significant and demand careful consideration. The introduction of CBDCs could potentially amplify cyber vulnerabilities, posing a substantial threat to the stability of the financial system. Moreover, the potential reshaping of the traditional banking structure and the increased surveillance capacity of central banks could raise serious concerns about individual privacy and autonomy. If not carefully managed, the risks inherent in the deployment of CBDCs could outweigh the benefits, leading to a destabilized financial landscape and compromised individual freedoms, necessitating a cautious and thoughtful approach to their integration.